Hi, everyone. This is Joanna Krzepkowska. I'm a real estate broker in the state of Illinois.
And this is Matthew Mettinger. I'm a mortgage lender in the state of Illinois with the Money Store.
And we're meeting with you every week to bring you up to date with the real estate market. It's exciting time. I feel like it's exciting time for the buyers, because we've been watching closely, and even though we have some, the value is growing of real estate year after year, depending, of course, on the market, we can see between 4 to 9%. But at the same time, this time of the year, there's always some decline. And we've been watching this closely, and week after week, we see houses that are closing at the lower value. We see buyers negotiating on the properties. We see properties sitting on the market a little bit longer. But I mean, I want to say that this is a typical scenario for the Chicagoland because of the weather, because of the school. It just happens for us that our hottest market is between February and June, maybe July. So, but that combined with the things that Matt's gonna explain to you guys in a moment, it's a huge opportunity for the buyers to actually go after this market right now. And if you can be more flexible, if you are okay with closing in the next 3, 4, 5 months, please listen to us. Use this for your advantage. Yes, the interest rate is going down. You can lock it at the lower rate, and Matt's going to talk a little bit about this next. But at the same time, you can take advantage of all the homes that are sitting overpriced on the market and negotiate for yourself a really, really good condition. So Matt, yeah, can you tell us about, what happened this week? I know we get some exciting news as well.
Yeah, we got some good news again, which I think week after week we should start seeing good news like this continue to roll in. So the JOLTS report, which is the jobs report, came in a little bit weak. That's good. That shows lower inflation, mortgage rates come down. Same thing with ADP, the job reports came in a little bit weak, same thing. And we're going to continue to see that as we roll into a mild recession, probably over the next 6 months. So rates are slowly coming down, which is good. We don't want a huge drop because that's going to drive the prices up really quickly. And for right now, for these opportunities that you're seeing, we have grant programs. We have a lot of things like there's Home Ready, Home Possible. Instead of the normal 5% down conventional, you can do 3%, which, that extra 2%, you think that's a pretty significant amount of money on a $300,000 house. That's 6,000 less that you have to bring.
I have a
So
question
really
on
helps you.
I have a question on that.
Sure,
Can I interrupt you? Because you
sure.
said, okay, like 3% versus 5 with this program. Can you tell us a little bit more? Is there like a FICO a score needed, a specific FICO score needed for those, or it's open for most of the people?
For most people, 620 is the minimum score for that.
Okay, that's great.
Below that, yeah, 580 is the minimum score for FHA normally. There are some exceptions. If you do 10% down, we can go down to 500. So there are exceptions. FHA, you can do 3.5% down. But I always tell customers, if you have the opportunity to go conventional, it's usually preferred just because there's no what's called MIP upfront, which is a mortgage insurance premium. So on an FHA loan, you pay a percentage of the loan amount and it's added to your loan amount. A lot of people don't know that. And so even though the rates may look a little more attractive, you're paying for that. And that's why they give you a little bit better rate. So you do want to go conventional if you can. Also, mortgage insurance doesn't drop off FHA loans through the life of the loan unless you put at least 10% down. Then after 11 years, it will fall off. So there's a lot of stipulations to navigate. We also have for certain census tracts, we have grants, 2,500 other amounts, depending on where you're moving. Then also we have the IDA grants, which are 6,000, 7,500, and 10,000. Each of those work a little bit differently. Some are completely forgiven when you finish the first 10 years. Some you pay back if you ever sell or refinance the property. And some you pay, monthly on a 0% second loan along with it. So there's a lot of different options to minimize, and if you do have a situation, you can't always do this, but sometimes you pair up with seller credit. You do maybe a 3% down program. Maybe you get a grant. I had someone the other day just bring 3,000 to closing because
That's
they
awesome.
they got a $2,500 grant. They got a seller credit. We did 3% down. So if you fall into the right zone, sometimes you can get a really affordable closing. And even if you don't, some of the, like I said, the 3% down closing is great because it's a very minimal down payment to get you in a property before rates continue to drop and then prices start to rise next year.
Right. So I know like the IDA programs are mostly, may correct me if I'm wrong, for people that are like first time home buyers or they didn't own the home for past 3 years, or anybody can use it.
Anybody can use it, really. Yeah,
Okay,
yeah, it
great.
is open to that. It used to be, I believe, a few years ago was first time homebuyer only, and now they've moved into as long as you meet the qualifications. There's some income requirements, but they're very high. Most county, it goes county to county. Excuse me, but Cook, DuPage, this area here, usually I believe it's 133 right now is the maximum income. So that's pretty generous. Two people
Yeah.
making 60,000, you're still under. So that's good. And it's really the nice thing too with IDA is we do 3% down as well. So
Hmm. It
it's a
doesn't have
very
to be
minimal.
FHA, it could be conventional, right?
Correct. So we can do conventional. You don't have to qualify. So that home ready, home possible. The income limits for most areas are around 87,000. So IDA allows you to do 3% down, but have higher income.
And do
So
IDA have like a FICO score that we have to think of?
IDA, the minimum flex,
Six,
so
I'm
so for
sorry, how much? 640?
640 minimum.
Okay, okay. And now one
Yeah.
more question about the 3% program you mentioned. Is that something that first time home buyers only or also open to the public?
Also open to the public. We have
Hey,
Yeah, we have a
that's
few
awesome.
different, yeah, we have a few, there's Home One, there's a few other options. So we definitely, the first thing we do is when we start your file, take a look, we go, hey, what are the options? What can we do? Let's look at your income. Let's look at what programs would fit. And then we want to obviously, if you're concerned about doing a lower down payment, we're going to go in that direction and look what possibilities we have. See every
Yeah.
kind of option, discuss the pros and cons of each one, and then kind of take it from there.
Yeah. Yeah, okay, that's awesome. I have this one client that I spoke on the phone yesterday with, and he works with somebody already, and they forcing him to go FHA because he's gonna bring less money to the closing. So my question was, okay, how high is your FICO score? Why are they
Mhm.
forcing you for FHA? And he's looking for a townhome. So unless we actually get like a true townhome that is like a single family that is attached to another single family, then
Mhm.
most of them their ownership is condo. So it's really hard to now after the pandemic even more. It's really hard to find a condominium ownership, condo ownership that is actually approved for the FHA loan. They have to go through a special qualification for it. So it takes more paperwork. It takes a long time, and some of
Yeah,
the
yeah.
HOA people that are lazy, they won't do it. So,
Exactly.
we come across like a lot of buildings that are actually not going to take the government loan, the FHA, and
Mhm.
if you are only looking at FHA, potentially being your like loan, then you kind of limited, because I know that we have a spot approval, but not everybody agrees to go through it. And then I
And you can't
found
always
this,
get it either. There's
yeah,
stricter limits than normal FHA on the spot approval. I believe that you can't have more than 10% of the units for FHA in the association. So if you have a 10 unit association and one property already has FHA financing, you can't do the spot approval. So it's very limiting. And exactly what you're talking about. I pitch a lot of the people because they want to do a lower down payment. If they qualify, I say, let's do home ready, home possible. You can still do a lower down payment than FHA because that's 3.5%. We can do 3, but then you can still get into those condo buildings where you don't have to worry about getting an FHA approval, finding a building that's already approved, which, as you know, is probably 2 or 3% of all the condos out there are approved. And many of the townhomes, even though they appear as a townhome, and everyone's confused by this, like you said, if they incorporate as a condo association, it may look 100% like a townhome, be a vertical structure where they're stacked next to each other, multi floors, kind of thing. It
correct.
can still be considered a condo. And so, one little trick too that I like to tell everybody, if you're looking in Cook County, the last 4 digits of the PIN will tell you if it's a
The four
condo or if
zeros,
it's
right? Yeah.
correct. If it's 4 zeros, then it is a true townhome. If there's a number in there like 0231, that's a unit number. And so that is a condo. And so you would have to do condo financing.
And then one more question about all those programs, because this is exciting. I mean, if you are one of the buyers that are like, okay, I would love to buy, but I'm struggling with saving for down payment. Hey, there are awesome programs out there, and combining them, like
Mhm.
you said,
Yeah.
may
Yeah.
be really worth it. So my question is, can we combine this 3%? conventional loan with IDA product together?
Yeah, so the IDA product that we do is 3% down conventional. So
Okay.
it's great. You can use that to go into a condo association, not have to worry. We just do the normal condo approval and that's it.
Okay, that is awesome. That is awesome news
Yeah.
because I know that the FICO scores are changing all the time. Sometimes they want like much higher FICO score to
Mhm.
qualify for those programs. But like you said, that the first one, 620, IDA is 640.
Yeah, and the nice thing too is so we have a simulation software where say, you're 615, we need to get your scores up. We can run you through the simulator, figure out what bills, what accounts you have need to be lowered. We can bring the payments down, do what you need to do. And a lot of people within a couple months, we can repair your credit, get it up to where you need to be. I have two people right now, we're working on their credit. I think in the next month, 2 months, we'll have it fixed and then they're back on the road. So
Yeah.
2 months goes by really quickly.
Yeah.
So it's some people get discouraged, like, oh, it'll take forever to get my credit up. Not necessarily. Sometimes we can do it really quickly and for
Mm-hmm.
not a lot of money.
Mm-hmm. Okay, got it. That is awesome. This is all great news. I think we have to like talk loud about this because
Mhm,
like I believe there are some false beliefs out there. People usually think that they have to give 20% down, which is totally not
mhm,
true. And now you kind of open my mind about the lower FICO score for those because like you said, sometimes it's just only those few points that we are missing. What can we do? Can we qualify?
mhm.
Can we start the process? Can we start looking at the houses? I always tell my clients that yes, there is a possibility that you're going to fall in love with the very first house that you see, and it happened before. And if you're not going
Mhm.
to put an offer on it right away, it's gone. And then you spend the next 2, 3 months looking for exactly the same home, and it's usually impossible. So yes, it's totally
Yeah.
possible to fall in love with the very first home. There's only few people that will be like willing to go for it. But at the same time, I tell them, why don't you try? We have 5 business days. We can run around the town. We can look at other properties so you
Mhm.
feel better. But if you feel like this is your home, you got the feeling. It's kind of like with the wedding dress for the women. It's like when you
Yeah.
feel it,
When
you
you know,
got
you
it,
know.
you found it, that's your
Yeah,
house. So
exactly.
this is exciting news. I'm gonna make sure that this gets spread out a little bit more to my clients
Mhm.
because that opens that door. Lower FICO score, interest rate is going down. Houses are sitting longer on the market. You guys can negotiate. You have those awesome programs that will help you with down payment. So that is like great, especially I feel like for younger people too. I know that people are thinking, oh, we have to move back with the parents, right? Because now we have to save. But that's going to give them an opportunity to maybe get out of the parents' house a little bit sooner than later. So that's awesome.
Yeah, and also one last thing that I'd like to add. So if you have a 401k account, normally they'll let you borrow up to 50% of the balance if you don't currently have a loan. So that's a great way to get a down payment. We don't count it against you in your debt to income ratio, so it doesn't hurt you for qualification purposes. And then most places will have you just pay it back in each paycheck. So it's a small
Okay.
amount, maybe $50 a paycheck, something like that. So it's a really easy way to get money. And the nice thing is most companies, you're just borrowing your own money, you're paying interest, but the interest is to yourself. So you're really not paying interest, as long as you complete the loan, pay it back, the interest goes back to you. So that's a great way that a lot of people don't think about. So if you do have a 401k, even if you have 10,000 in there, you may be able to borrow five, which will put you in a position where, hey, maybe you're a couple thousand short. We pair you up with a 3% down program. You're able to get maybe a $2,000 seller credit. We can sometimes piece that together. So it's always worth taking a look. If you don't have a target, you don't know what to aim for. So some people, it's a lot less money than they think it will be.
Yep.
So
Yep. Awesome. 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 Awesome news. Awesome information. Great. Okay, let's wrap it up. That's it what we have for you guys today. But I mean my brain is already like going places because I'm like, oh my gosh, we need to make sure that you guys hear that because I mean we live in it. We know
yeah.
those programs exist, but I feel like we don't talk about it loud enough. So if there are some people that are interested and they're waiting, and just like the client that I just spoke with yesterday is like, oh my gosh, you actually qualified. So whoever, that's why I love like second opinions. It's like don't.
Mhm.
And I tell my clients this a lot. Like sometimes they will go to the bank, they talk to somebody that is maybe not as qualified as you, Matt. And then they just get this idea that yeah, they need to have 20%. Yeah, they have to have a perfect FICO score, 720 or 780 or 800.
Yeah, yeah,
And they just kind of talk to one person and they were like, okay, then that's impossible for me. It's going to take me 5 years
yeah.
or
And
whatever. So,
experience matters too. I can tell you, I just approved someone. They went to three lenders prior to me, and we just approved them.
yeah.
So it really, sometimes you have to know the rules very well, know how to navigate, things like that. Some people just aren't willing to take the time. If it's tough, they just don't want to do it. They want to move on to the next one.
Or they just want an
So
easy peasy,
exactly,
loan that they
yeah,
don't have
they
to
want to
stretch
code.
about.
And I feel like people get let down, and that bothers me. So I like to push, and if we can do it, let's do it.
Yeah,
So
absolutely. So yeah, so this is definitely exciting news. Yeah, thank you so much for the updates on those programs, Matt, because I know they're changing all the time. It's sometimes it's a matter of, couple of weeks or month and we have something new
yeah.
introduced or something else change. Like those FICO scores. So that is for me is like, oh my gosh, okay, I have so many people that I can talk to. So that's great.
You're
Thank
welcome.
you so much, guys, and we'll see you next week.
Have a great weekend.
Thank you.
Bye-bye.
Bye.